Welcome to Advice from the Deal Room. I got Matt here with me, and I'm Ben Record. We are going to talk a little bit today about how to prepare for a successful loan. You can call it our AI borrower playbook if you want. But this is going to be primarily all about how the loan prep and getting a loan done doesn't just start at the time of application. It should start way before then. And even every time you're filing taxes, you should be thinking ahead for, am I going to be needing a loan in the next year? What things should I be preparing for so my CPA knows I need to show income? All of those type of things are going to be some of the stuff we're going to talk about today. Matt, what's the biggest thing you think about when you need to prepare for a loan? Before you even reach out to us, what should you be doing?
First of all, you should be gathering, like, just having your documents in a easy format that you can gather quickly. The biggest mistake we see is people go under contract to purchase a property and they're not even ready on the lending side. They view the lending side like they view the residential lending side as a quick, I need some documents, but it's a quick underwriting process, where our side in the commercial world is got greater links to it, and documentation that you might not think about to gather. So it is better to reach out to somebody before you go under contract, before you need that loan to prepare. The other thing I think that is the biggest mistake is not working with your CPA and understanding what what they're doing, the strategy that they have for your tax deferment. It's never tax avoidance, guys. Trying to avoid taxes. It's just always deferment, but their tax strategy with you, and having that conversation back with your CPA to make sure that they're setting you up for borrowing success. Since we're looking at not just your personal tax returns, we're looking at any other related entities that you have as well too. So taking the whole picture into play to make sure that you are set up for success in that transaction. I think those are the two biggest mistakes that people make, is just not communicating with your CPA and having a good tax strategy and open communication with them. And two would be not knowing where some documentation is and not understanding your overall financial picture in a clear, concise manner. And that's where we try to come in and help. That's where we want to make sure clients are set up for success in that way, and work with them to gather these documents and review things before they go under contract, if possible.
I mean, even just with the document collection piece, you would expect that if you were in an application with a specific lender, that if you were slow on getting your stuff to them, they're going to be slower at getting you a response. But if we can speed that up, even for our underwriting, even for Jay, our underwriter, he's going to be way faster at getting your package prepared if we have the documents collected up front. If when we send our request list over, you actually get us 90% of what we need, and maybe even throw in some verbiage or a story that goes a little bit with your background, then Jay can dive right in and get right in on the underwriting. Half the time we'll request stuff and we'll get answers in, but it's not all of the answers. And it's almost like the client, well, they didn't ask for that specific thing, so I won't give it to them until they ask. That's where you got to remember, when you're working with a broker, you got to kind of treat us almost like your counselor. You got to tell us all your dirty secrets and all of your stuff, so that we
Yeah.
can really have the full picture, and then present that full picture in the packet we need to the lender.
Yeah. I always tell my clients, treat me like your therapist or your bartender. Tell me your deep, dark secrets. We need to know everything up front so we can prepare. Because when you are working with a lender, the worst thing that happens is something comes up last minute, and when it's already in credit's hand and they're finding out about it later on, it's hard to overcome that obstacle and mitigate whatever may come up. If we're mitigating it up front, then the credit teams are a little bit more adaptable to that and understanding if they know it, and we're forthright, and have a plan. And doesn't mean that we give every single thing, like all the skeletons, but we understand the skeletons. And if it is really a skeleton, is it really something we need to worry about? Just tell me. Like, I'd rather know now. Like, "Oh, I had a ding on my credit report from 5 years ago." Oh, okay. So what happened? Just tell me the story. Let's get it written up. This might not be a problem, but let me understand this, so when they do pull credit and we go, oh, so yeah, 5 years ago they they were out of the country for a month and they dismissed their payment, whatever it may be, especially if it's related back to a mortgage or any kind of real estate that we need to make sure we understand those things. And, no, tell me the skeletons. So, getting everything out and being open and honest with us, then we can be transparent and open and honest with the lenders and portray it in the best light for you, for our clients.
I'd go on to that to continue kind of what we were talking about when we were chatting yesterday, preparing for this. It's not just about document collection, but it's trying to understand what is the client trying to do? What is their actual intention? And I think that's really important to make sure that your CPA understands that as well, because so many times CPAs are just trying to minimize your tax liability or get you to pay the least amount of taxes every year, which is great. But if they don't know that you're planning on potentially financing those properties again, tapping equity to use for other purchases, things like that, you got to put yourself in a position where you can go and borrow that money. And if they don't understand what you're trying to do, they're not going to be able to advise you. Just like if we don't understand what your full goal is, we might put you into a loan that isn't the best fit because 2 years down the line, you need to pivot to something different. And if we knew what you were trying to do, we can advise and guide you through that.
Now, so yeah, in the doc gathering, it's also informing us what your short-term and your long-term goals are so that we can then take all the information you provide us and understand that what's going on today and what's going to go on in the future that you already have planned. So then we can set you up for success all the way through this transaction and years down the road is the ultimate goal. It's more of a deeper understanding of what's going on. There's a lot of docs, so we request people go, oh, I got to request this. I'm like, this is information that should be readily available if you understand your financial situation. And yet we ask for a little bit more because we want to have a deeper understanding what's going on. So when the lender does come back with what happened here, what happened there, we know how to answer that question back for the lender at a faster pace instead of having to go back to the client. Then we're just playing the middleman game. And our value add is truly understanding what's going on. So then when the lender goes, I'm like, yeah, we know that that's on page 14 of our write up. Go read page 14 of our underwriting write up. And they go, oh, yeah, thanks. Never mind. Thanks. Those are the things that we tried to mitigate by having more information up front. It's always best. More information is always better. Um, Bang, let's go through some of the things that
Yeah, what are
you
some of the big differences between like our request versus a residential request, just so we can kind of clear that up? Obviously, our request is going to be varying a lot based on the asset type, but there's some key differences.
big thing is we're always looking for obviously tax returns are needed on both sides. We don't look at W-2s as much. The only times we do ask for W-2s at points to if you have not filed your tax returns yet, but we're just past year end, you got your W-2, but you haven't filed yet. We're going to need that. Sometimes through SBA lending, we do need W-2s to verify. Some SBA lenders want to verify each tax return to make sure the W-2 we know where that income matches on the tax returns. So those are required both. Then we start getting, one of the business tax returns, which I believe on residential you're going to need as well. Typically K1s as well too. We're going to need that information. We're also going to need to get more in-depth information about your businesses or your other debts that you may have. Because there's some debts that report on your personal credit report. Majority of commercial loans do not report on your personal credit report because you're taking out an LLC's name. So we need to understand your scheduled real estate owned. We need to understand your personal financial statement. We need to understand all the assets you have, all the liabilities you have, all the real estate you own. What's the debt associated with each piece of real estate so we can understand the cash flow of that real estate. We need to understand the business debt you may have that's above and beyond real estate debt that might not more than likely was not going to be reported on your personal financial statement because it's related back to a business, so it's not your personal debt. We need to understand a business debt schedule. We're going to be looking at year-to-date financials on your businesses, year-end internal financials on your business as well if you have not filed tax returns. we're looking for, the other things they're looking for, driver's license. We also want a little bit of a bio and resume. We
Hmm.
don't want to, we want to understand the borrower, where the residential, you're not going to get that. The residential is not going to be asking for that business debt schedule I was mentioning before. They're not asking you for a personal financial statement. We're asking for the bank statements to back up the personal financial statement. Yes, they're asking for that in residential too. They want to see your cash you have. Ours is in verified liquidity, that because liquidity is a very key topic right now for lenders. Are you liquid enough to make it through economic storms? When the pivot swings in lending, we see the pivot swing where they are very hung up on a lot more details than they were 3 years ago,
Hmm.
4 years ago. We want to know, are you as liquid as you say you are? You list out $200,000 in your personal financial statement. Show me that $200,000. And depending on the business that you own, depends on the additional requests we may have. We might want to look at if you're a construction company, we're going to want to see a little bit more on accrual basis versus cash basis. Cash basis is what you're reporting to the IRS, so you minimize your taxes. You might be making different money on an accrual basis because the way you bill out and you have accounts receivable, accounts payable. We're going to want to see some of those aging reports of accounts payable, accounts receivable. We're going to want to see your WIP, your work in progress on construction companies. You know, Gas stations, we want to see fuel sales. We want to see different things. Multifamily property. I want to see your rent roll. I want to see some leases. I don't need to see them all depending on the size of the property, but at least understand what the leases look like. Who's responsible for what, even on a commercial property. This is a true triple net lease. This is a modified, what's the lease that's behind this? Who is responsible for what? So we can have a better understanding of what's going on in the financials. So depending on asset classes, as Ben mentioning, we can get into you get in the gas stations, you go to hotels, have different reports. We want star reports. There's different information based on asset classes that need to be gathered to have all the information that's needed to truly underwrite a loan and understand. It's always understanding the risk and the cash flow of the asset that we're underwriting and the person that is personally guaranteeing that asset as well.
Hmm.
Ben, in your experience, what do you see as the hardest to get from people?
Obviously, tax returns are like difficult mainly because one of the biggest things that surprises me is just the lack of organization that I feel like a lot of people have with important documents like that. You would expect that your tax return, you put in some nice digital folder or something for yourself. And a lot of times people are like, oh, I got to go get it from my CPA again. It's like you should keep some of those things on hand. You're going to appreciate your life being way easier if you do that. For myself, I've had to implement some processes and rules about how I always add that in, especially with my wife when we're filing our taxes and stuff every year. Of like, let's keep all that information in a place every year that we can go back to, and it's not digging through emails and all that stuff. The other thing
Ben,
I feel like,
before you go on, Ben, I'm gonna say I have mine all filed electronically, but to get all my K1s and certain things, they're in different folders, guys. They're person who does this for a living. I can gather it in 10 minutes, but is it all in one spot? No, but I know exactly where it's at to get it, but it's not as organized as it should be. So I get it, but I also know how to get it really quickly without reaching up to my CPA. Getting those things in and saving them and having an electronic file for your stuff, not just for us, not for lending purposes only. There is if you ever got audited by the IRS, you need to go gather all the stuff you had done from years ago. Do you want to make this process simple, or do you want to make it even more time cumbersome on your life? These little things that you just need to be on your mind as you're getting into the commercial, or even if you are in multiple commercial properties and you're doing your next one, having these things ready because lenders are asking for some of these things annually on you. So you should be able to
oh
have
yeah,
this in a repository that you can send it to your lender in a quick, efficient manner.
100%. I would also say that just filling out in general the PFS or the personal financial statement is always painful. That's one of the things that I want to just pull up our copy of. I think I can share my screen. Oh, if you want to turn on screen sharing, Matt.
Yeah, got that for you, Ben. But yeah, I would say that is probably one of the areas that I see. that people have the biggest mistakes on is how to complete a personal financial statement, what to include, what not to include. And, you know, give us more information if we need to remove some type of personal financial statement because it's truly not personal. We'll take that into consideration ourselves, but give us the information so it can be populated. That's the loan documentation checklist, which is one of
Beautiful.
these checklists we have behind the scenes that is what we live off of, what we need for. This is the request list that we're mentioning. We send it out to you. This is a generic one. We tailor it based on the property type and everything else that's going on. And all the corporate documents is on page 2 of this of what we need based on the entity that is going to be the borrowing entity. So we need to understand that borrowing entity and the corporate documentation so the lender knows who's signing on what, who has the authority to sign. And that is also necessary for the title company to have as well too.
Obviously, you should have all of these if you own a business, but most businesses don't have them readily available. And the operating agreement is something that I feel like a lot of people end up missing when they're opening their business. They just don't get around to creating it until they have a specific need for it. But what I would advise is get all of these ready because you're going to need these all the time when it comes to your EIN letter, all of these different pieces. You're going to need all of the time. Get them put somewhere safe. If you need a template for an operating agreement, reach out. We're happy to give you something that can help. Again, we're not lawyers or anything. Have your lawyer review it, but we're happy to get you started on some of these because
So the
it's good to have.
biggest mistake, certificate formation, we can pull that straight from the Secretary of State. Typically readily available. We just need to know the name of the entity. This could be a new entity you created, it's not on your tax returns yet. We need the certificate formation. The operating agreement, most people, since if they're 100% owned by a husband and wife or just by themselves, typically it's not going to be required to have one in the state of Washington, but you're going to need to get one for lending purposes. And so sometimes it's just yourself. You go, why do I need an operating agreement for just myself? We still need one for lending purposes. So those can be your more generic operating agreements that can handle in that place where you don't have outside investors, you don't have partners in it. It can be a simple version of an operating agreement to address lending needs. The one that I find that is missed the most is people do not have it, can't find their EIN/SS4 letter that they get from the IRS. They cannot find that anywhere. And we need that to verify, especially for a newer entity that has not filed tax returns. We need to verify that that is the correct EIN number when applying for the loan.
And it can take a little bit to get a new copy of that letter. So
Well, you brought up and sometimes the IRS, so there is an online tool that you can go get your IRS EIN number when you originally set up a business through the website. You can have it electronically provided to you or mailed to you. However, there is sometimes system problems where if that same name and a different state, there can be reasons why they're not able to produce an online letter to you, and then you have to follow the facts, the other procedure processes and procedures to obtain an IRS letter. When you do have to go through that, that does take 4 to 6 weeks. So you have to be on top of getting that information, especially if you're setting up a new real estate holding company to acquire a new asset. Those are things that need to be on the forefront of your mind when you're in the process because it could take some time if for some reason you're not able to get it online with the IRS.
the worst thing that could happen would be you say, "Oh, well, I'll get that." You get into the loan, you've got all your other things in, you're moving through the loan process, but the loan can't close because you don't have that you would you would bang your head against a wall in frustration in that scenario. And that's we've had to help clients in the last minutes of a loan get through some of this stuff when they're opening a new entity, those type of things. But this is why on our checklist we go through all this detail because we're trying to think of all of the problems that could happen. Let's collect all the information we need to solve those problems ahead of time and make it so that when we get into the closing process, we're twiddling our thumbs waiting for the loan to close rather than panicking because we don't have all the pieces in.
And then one last, before we go into the personal financial statement and schedule real estate owned, and a live look at that, how to the mistakes that are made and how to fill one out correctly. Insurance, insurance, insurance. Everybody goes, "Oh, I just get insurance last minute." I would tell you that market has changed in the last year, couple years, where insurance is not, you can't just get it. Sometimes you get a binder quickly, sometimes you want to shop a little bit because some insurance companies are pulling out of different markets or they're just having very high rates. And so you need to look at different insurance options. On top of your insurance is key in mind getting it, or at least having an agent on your side that can be reached out through the loan process. We don't have to have insurance as you're giving us all your tax returns and we're underwriting the loan. We need to have your insurance contact information so then we can, behind the scenes, as we're running in parallel with closing the loan, we can reach out to your agent, get insurance ready to go. So we are not behind the scenes and have to hold up closing because, hey, we don't have insurance. We need insurance to close on a property. We need to have that in place. The lender needs to be perfected on the insurance policy to make sure that their interest is protected in the case of a tragedy. So insurance is another thing that I feel like, oh, I'll just do it later. No, guys, just give me your agent. Give me your contact agent. We will handle
Oh
the
yeah.
rest. Let's do it for you.
And if you don't have an insurance person that you have that relationship with, that would also be something that I would build or develop, because the clients that I've worked with that do have that guy that they go to all of their properties for, he is always so much more able to help and understand, because he understands you, he understands what you're trying to do with your properties. He's worked with you before. He can spin up insurance way faster than, oh, I'll just shop around. That's not the time to shop around when you're buying a property. You can change your insurance after you close. You can do all of those things. When you're shop trying to buy a property, you need to have your insurance just done, and it needs to be right and simple, and you can price shop later.
Or if you're going to price shop, be early in the game on it. Don't be trying to
Yeah, be
price shop as you have a week left to close and you want to get the best deal of the week to close. That's why we're here. The best is to use an insurance broker who's got multiple avenues to get it done for you.
mhm.
They're not just looking at one provider. They have multiple providers because they can pivot for you to the best rate insurance typically with a good broker. And we do have recommendations. If anybody needs a recommendation, please don't hesitate. We use some really good ones out there. They're always on top of it for our clients. We won't go into any stories about that. I know Ben had a client that we were able to use our insurance broker and we were able to get something done because they weren't moving with their transaction on their side because their broker wasn't moving. We had to pivot to ours and we were able to take care of it. So Ben, you want to pull up that personal financial statement?
Yeah, look at
Sure.
this. It's all beautifully redesigned. I think in last month we re-updated this a little bit,
Yes,
but
yes, we've updated this. And so what our personal financial statement comes from is to mirror, by completing ours, we're able to complete different, we have all the information on this. So if a lender requires personal financial statement on their formats, on their templates, we're able to replicate it on our end. So you do not have to replicate it on and continue to complete multiple personal financial statements. Typically, we can fill out the personal information on a lender's form and just say see attached for our personal financial statement. They'll use it because it's got all the same exact data that they're asking for.
so it starts with pretty personal information: your name, your address, your social security, date of birth, mother's maiden name, kind of all those things that you would normally give a lender when you're filling out an application, all those type of stuff. We go through your spouse information, as well as then we go into your annual income, both you and your spouse, and your annual expenditures. Matt, explain annual expenditures, because I feel like clients miss this all the time.
It's great to have this. We always need it. No, I would recommend putting in there. So this is things back for your personal life, even your real estate that you own. Because if you're going to include the income that you're making from a salary, you're making your real estate, we see real estate income over here. We see other income. We need to relate back to the expenses that are related back to these as well. So if you have commercial real estate property, you're making $120,000 a year on, this is net operating income, not your gross revenue that you're receiving in rents. This is your net operating income before you make mortgage payments. Then you come over here and you place the combined mortgage payments over on the right-hand side. One thing that I would say is typically missed on this that's not captured below in the rest of the personal financial statement is if you rent. If
Mhm.
you do not own and you are renting, we need to have the rent amount listed there because we need to calculate that into your housing cost for your overall expenditures. Majority of the expenditures that we're looking for are captured below, but the ones that are not are rent and typically alimony and child support. Most everything else on here is associated with a property or I should say associated with debt. So as long as we capture the non-debt expenses up here and your income is great to fill out for there's a change in income that's not reported on your tax returns. If you are now, no, you just got a new job and your salary is going from 100 to 150, whatever it may be, put the new salary on here because we're going to be looking at historically your tax returns for that. But if you made a change, we're going to need to know that. Then we're going to need to gather a year-to-date pay stub so we can verify that you're at that new salary range so that can be included in your ongoing future income.
Because how we look at it for the commercial side is not your debt to income, it's your global debt service coverage ratio. And we can go more into depth how that's calculated, but it's a combination of the property or the asset you're trying to purchase or refinance and the debt service that it brings you. And then we blend your personal debt service into that to get your global.
Yes, and then we'll have on our next call, we're going to be have our underwriter going through some of these aspects of what this looks like and how it's calculated and how that can impact your borrowing. So this first two sections are really just gathering some information about you on a personal level, some of your expenditures, making sure there's no contingent liabilities, make sure you don't have past due taxes to the IRS, understanding these you have any lawsuits against you, any judgments outstanding, so we can understand because a lot of these questions are going to be asked later on by a lender in one of their forms. We need to know how to answer these questions. Plus, if you answer one of these questions that then triggers something else, we make sure that we gather that information from you prior prior to moving forward with the lender. So then again, as I mentioned earlier in our podcast, that we can be on the forefront of everything. You give me everything. So then when that comes up, we're already have the information and we can mitigate it.
Exactly. For example, we've had clients that have told us about some judgments that were against them that they're in issue that they're currently arguing with in courts and stuff like that. And it's not an issue, but it would have been an issue if we told the lender about it when they found out. If the lender comes to us and says, "Hey, what's this?" If we hadn't known about it, one, we would have looked like we didn't know as much about the deal and it would have made them more concerned about our borrower. And two, it's always bad when they find the problem. If they're going to find it, we need to tell them beforehand. And that's how we can massage how we explain it and how we handle it if we are able to do that ahead of time rather than reacting.
So the next sections are just we're starting to list out your assets. So this is the cash that you may have. I have clients, we all have clients that have vaults of cash, just safes of cash at home, 10, 20, 30, 50, 100,000, who knows? List that cash out. That's an asset of yours. You own that. What is the cash that you have in bank accounts? We're listing at the bank accounts that you have, all your bank accounts that you own that are, we need to count that for your liquidity. Then we start getting into your marketable securities. Are we asking for the full detail here? It lists out the full detail. But at the end of the day, I have X dollars amount with Morgan Stanley. List out you have that. It's probably diversified into hundreds of stocks sometimes. Just list out your dollar amount of market value is what we're looking for.
And
That
we'll
way,
verify that information when we request those statements later.
yeah, we will come back and then require that as a verification of liquidity because stocks are looked as a liquid asset. That's why we're looking at marketable securities here. because in a sense, you can liquidate those to become cash faster than you can liquidate real estate, correct? There's a fast active market. If I want to trade today, I can get cash in the next 10 minutes back from my stock portfolio. Then we get into retirement accounts. Retirement accounts is looking for your, you know, 401ks, things like that that you have set up with your employer. We're starting to get this next line is just your personal residence. This is why there's only a couple lines. We're only looking for your personal residence that you may own. You may own one, you may own two. We're looking at for those that attribute back to you on a personal level, not your investment properties. Your investment properties will come down later on.
It's the next
Um,
sheet.
Next one is key on how filling this one out. This is life insurance. When I talk about life insurance, there's two forms of life insurance. There's term life insurance, there's whole life insurance. Term is what it is. It's I got $1 million policy. I'm Ben over there. Ben dies, we get $1 million. There's no value to it today. However, there's whole life that starts to accumulate a cash surrender value. You have money that you can draw out of a whole life policy. Understanding the cash value of those policies, again, that's a liquid asset that you can use for liquidity. So we're looking at that. We also want to know if you've borrowed against that whole life policy to understand that maybe your cash value is 600, but you borrowed 500. You really only have 100 access to that money. We want to understand the life insurance and the beneficiaries of those things. And those are back lender questions that typically come up in a transaction. Next, we want to understand your business ventures you may have. If you own multiple businesses, understanding the business and the value of those businesses too. You could have the value of a business. I'm looking at your net value, your assets minus your liabilities to understand if you were to go sell your business tomorrow, what's that worth? That is a value back to you that some people miss and go, oh yeah, you're right. I guess that my company is. If I go to liquidate this tomorrow, my company is worth $1 million. That's an asset of yours.
And it's really important to show that, especially when that may not be as liquid as your other securities, but when they're looking at you as a whole, you want to show all of your assets, not like just a small portion of it, because then they're going to judge you or underwrite you differently. If they see that, oh, he's got assets beyond these, there's less of a concern about if shit hits the
Well,
fan.
Well, where's your money going? Like, if we're starting to see a lot of stuff, where's your money? Well, I bought a business. Well, that's money you spent that you took out. We understand where the cash has been going. If you've been making a certain amount of money every year, but you're not showing a lot of assets for it, we need to understand that. So accumulating all the assets on here is very valuable to understand where the additional expenditures are going every year above and beyond what we calculate of expenditures. Obviously, next is just credit card debt. Keep going into that. This is transparent. Vehicle loans are transparent. Now we're looking at unsecured loans again. If you have unsecured borrowing that is, not credit card debt, but you have anything else, that's where this starts to come in play. We're also looking next category, next schedule is home equity loans. If you have a HELOC or a home equity loan against your primary residence listed here, so we understand what the payment of that might be, what your credit line might be. Do you have access to that? That can actually build some liquidity back for you because you have access to liquidity there. We need to understand the payment ramifications of this. Then you have other notes payable. There's a few people that have other notes payable to individuals out there. This captures that item. And a lot of this, by inputting all
Populates
the
down into here, right?
information, populates down into this section, which you'll see all the ones that say zero, those are all calculated out. It will start to calculate your personal financial statement for you. This starts to build what your assets are, your liabilities, and your net worth. And you'll see some other categories that you guys can add in here. We're looking at, you have non-marketable securities. Those are other assets you might have investment into a private firm that you might not be quote unquote business venture, but you have invested as an investor, listed as a non-marketable security. We're listing all the personal property you may own. We've listed out the debts against your cars, list out your vehicles right here, your other personal property. You have a lot of other assets that you purchased. Now, don't get to, I have a $500 chair, we're not looking for your $500 chair. We're looking at accumulative assets right here, something that's got sustainable value. If it's noteworthy, I've known people that have gun collections,
Jewelry
wedding
collections is
collections.
probably the most common.
Correct. They have a lot of jewelry that can be, it's an asset you've purchased over years that has a sustainable value that is got a secondary market for it. The next is for notes and everything like that related back to accounts receivable, accounts payable that you may have that are unique. These are unique transactions that go on here. Contingent liabilities is the next section. That is something that you have that you could be liable for, but is not listed up above. Some example of contingent liabilities, you have a non-recourse loan. You're contingent on a bad boy carve out. So if something happens, that liability could come back to you on a personal level. Then we want to know over here is the unique thing that we just added to our this most recent personal financial statement is to understand your SBA loans that you currently have outstanding. Why? Because SBA has a limit of how much you can borrow from the SBA cumulatively at one time, the max dollar amount you can have. So we need to know that. So if we're going for an SBA loan, I don't want to apply for an SBA loan when you have no capacity left. We need to understand how to we might need to restructure your overall financial position, your current loans to be able to achieve whatever we're trying to, whatever
Yeah, because it
transaction
may
we're
not
working.
necessarily mean that you can't get an SBA loan right now. It just means we have to refinance one of your existing ones out of the SBA so that you open up that bucket
Or
again
where
or
we
something
need to
along
go.
those lines.
Or we need to go SBA 504, SBA 504 green, is the other transaction in a rural market. Let's go to USDA instead of SBA. Let's look at our different avenues so we understand your total picture and not, again, caught off guard and we send it on through like, they have no SBA lending capacity left. That's the worst thing to happen because you're already going down the path. The last section here is we have built this out with a lot more detail. You're going to see this is actually a two-page schedule real estate owned. So the two pages, the first page is just the second page, I should say, it's just an extension of the first page. So the address you put on the first line item here will actually populate into the first line item on the second page as well. And because we just have so much information that we like to gather on all your real estate, so then we have a really good understanding of your real estate portfolio. This includes the asset type it is, the day you purchase it, the percentage of your ownership, what entity owns it, who is a lender against this, what's your current debts, current payments. We understand again, trying to calculate your cash flow and also ownership structure of every piece of real estate you have. So I know this is a lot of information on the scheduled real estate loan that we're asking for, but it's very valuable in the sense of underwriting our borrowers, and then working with their lenders to have a clear picture of everything that's going on in your moving life. This personal whole 6-page document here is to capture everything of what you're truly worth today and all the moving pieces in your life. This kind of sums it up. Sometimes it's humbling to put one together. It is a good work. And then once you have one put together, you can just update it regularly. So a lot of the
Yeah,
clients we work with, I will, this is another second loan we worked with. I send them back their one that we did 6 months ago and say, hey, update
what's
this
changed?
accordingly. I've updated down the transactions. I know that we've taken place. Please update these things accordingly. Or I just may ask them and go, hey, give me your updated loan balances, these things updated, you know, bank statement balances, things like that, that way easy to update because your life has changed in the last 6 months. Having that
Exactly.
information, we have that continuing on in a client's file. So they continue to have to change. And a lot of the lenders want an up-to-date personal financial statement within typically the last month, last calendar month. I would want it as a 1031. I don't want it as 1125 as of yesterday. It's a really unique day. I'd like it at a month end. And typically they're good for, depending on the lender, 30 to 90 days. It's how good a personal financial statement is on file. So even for running a transaction that is taking a long time because there's environmental stuff, things like that, we might need an update to your personal financial statement in the middle of a transaction.
And that's where, if once you put the heavy lifting into completing this once, like you said, it's way easier to keep this refreshed and updated as you go. There is a little bit of heavy lifting. These are probably two of the most time consuming parts of our checklist. But once you get it to us, we can help you maintain this and keep this accurate. And I don't know how many times I've had clients after a transaction be like, "Hey, I know you have my file. Can you send it to this guy because he needs it for my CPA or whatever?" And we can get your information out to people. That's one of the services we offer here at AI, is not just being a transaction one off. We want to be a relationship. So we keep all your file secure and safe and ready to be shared if you would like it shared with different lenders, things like
We've gone through some of the major documents that we need. We're going through some of the process here. I think this process, we're making it sound like there is a lot going on, but this is a big transaction typically. Some of these transactions are in the millions, but $100,000, $1 million, still a large transaction, guys. You know, got to make sure your information is right. And the commercial lending it's just different than residential. We've got to express that so much. People, especially people that haven't done a loan yet on their commercial side, and they're thinking through the last loan that they did on their primary residence. Where it's, oh, I only need to get no, 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 no. Here's how we look at it.
that.
You know, biggest question I get asked a lot: my credit score. I go, in commercial lending, typically 99 out of 100 times, we care about a score being reached, but it does not impact your rate like it does on the consumer side. It's not risk-based pricing from that aspect. We're risk-based pricing more on the asset class that it is. We're looking at different factors. We're not looking at, oh, he's got a 750 credit score, you get the best rate. You can get the same rate as a guy with a 680 credit score, typically. This We're looking at different factors in commercial.
You could almost potentially get a worse rate than the guy with the 680 credit score if his deal and his asset picture is way better. I mean, you could have a lower credit and have less risk in all the other areas, and the lender is going to give you some credit for that too.
It says the biggest question is asking me, well, my credit is like 800 credit bars. I go, okay. Does he have good cash flow? What's the property look like? I have other questions where a lot of people get hung up to thinking through the consumer because that's most of our lives, right, guys? We get credit cards, we have auto loans, we have primary house loans. Those things are all they're all credit driven. They're all based off of credit score. In the commercial world, it's a different aspect of what we're looking at. And that's why we have different ask of questions here, different documentations that we're going through, and prepping for the loan is different. Do we want somebody that's 580 credit score that's a deadbeat, can't pay their credit? No, not mentioning that, but we're trying to say that's not the end all be all. Yes, as one sliver of the overall picture of what we're looking here. Can you pay back your debts? Yes. We don't want somebody that's in default. We don't want these things, but we want all these other pieces that come into play. And there's a lot of documentation, but we organize it, we get it ready. That's what we're looking at to get into the underwriting process. I have a lot of clients. I even had to apologize to a client yesterday. I go, I am so sorry to be a pain, but I need this and this and this. Like, I need the full tax return. We got the first 2 pages. There's more in a tax return than what I'm seeing from your adjusted gross income. I need to see other things that I might be able to add back into your cash flow. We need to understand your cash flow. There's more information that we need to understand your cash flow and not looking at your debt to income. Cash flow is key. Cash is king, right? That's how you make more money. People invest into real estate for the cash flow of that property. There, so we're looking at different aspects. So I said, Paige goes, no worries, I understand. We gotta get this all right. I go, yeah. First 2 pages aren't going to do it for me. I need the full tax return. I need every schedule on your tax return. It provides relevant information back for underwriting process. All these documents we're asking for is not for fun. We're asking for it
No.
because we need to understand and put you in the best position today and make sure that does this actually make sense for you too? Is if we understand the whole picture and go, I went here's my recommendation. Here's my advice back. We wouldn't do this because of this, because we have your full picture. Instead, you're running down the path and you're like, man, now you do not set yourself up for long-term financial success. Well, why? Well, here's what we saw in all your information provided to us. Those are reason another reason why we would like to have all the information, you know. So its process is fun, right, Ben? Gathering documents from clients is
It,
fun.
it
Some
is.
clients are
It's
quick. Some clients, you guys have all the process. One thing I always say is connect us with a third party that has those documents that we can gather the information. I always tell my client, if you want, if your CPA has it and you need to go to your CPA, just connect me with your CPA. I will gather those documents on your behalf, and then I can have questions back with the person. So we're not playing the telephone game here. We're actually playing direct to the horse's mouth. Who put together your internal financials, your tax returns, whatever it may be. Put me in contact with those people so we can get these things answered quickly.
I would say that one of the biggest mistakes is just not having it updated correctly. Either you're like sending, hey, I got my tax returns, but you don't have this year's tax return in the group that you send. Oh, my PFS is good, but it's like not, it doesn't have the last two properties you bought on it. Those things will be caught as we go through the process and cause us to slow down as well as the lender to slow down, especially if something pops up. Well, it's on your tax return here, but it's not on your PFS. So why don't these match up? And whenever those problems start to come up, it's generally because we weren't prepared and we weren't actually getting accurate information from the client.
For us, is when we're done with our underwriting, even there might be documents that we don't specifically need to complete our file internally. We're asking for it because when we start working with our lender network and they go, yes, we like this deal, our process on our side, which we'll talk through that in another podcast, is what they're doing is gathering this information, getting to a lender. Faster, more concise information we have makes the lender side that much easier. We care about making this process faster and better and smoother for you. And when we send something, they trust it because at the end of the day, when we underwrite, we're matching what you provided to us, and it's going to be the same information they get. So when they see our credit memo that we put together, they know that they can give us a yes or a no based on their criteria, and we can start moving down the path forward. So the information up front is key to making the process overall smoother, faster, and better for the end client. So doc prep is the unfun part about getting buying a new property, getting a new loan, whatever the debt scenario may be. It's not the most fun process, but it's a very key process to get the details right up front to make the overall process better for your situation.
And it's one of the characteristics of successful people or the people that we've worked with that are the most successful, the ones that have this stuff in order, even if it's not perfectly organized, but they know where to get it. They have their team working on it. They're happy to get you the stuff. Those are the people that continue to have the most success. They're the ones out there doing deals all the time because they're not spending all their deals trying to get organized and trying to get their stuff together. Like they have it because they know the value of time. They know the value of if I have all this stuff, I can go keep looking for properties. I don't have to spend my time looking through my email for my tax return that my CPA emailed me last year. And oh, where's that K1 that I need? Like you can lose yourself in all those. And then it's like you said, almost the humbling part sometimes of when you're going through it and you're man, my numbers aren't where I want them to be. If you just keep that updated, you don't have to have that humbling experience. You know where you're at. You know how your personal financial statement looks. You have a better understanding of that. And if it's not where you want it to be, now you can make the moves to not having the information isn't actually helping you of anything. It's probably only keeping you from the truth and keeping you from.
We're here for the prep work. We're here to assist you in the prep work. That's what this team is here for. We have a team built to get this prep work done. Ben does that I do for my clients. We have members behind the team. We're here to help this process out to make it easier. And we know we build you up and get you to the process faster and make life easier. Our ultimate goal is to see success for our clients. And to do that is the upfront prep work. Come to us beforehand. come to us before and ask what's needed. First time doing this, we're here for you. 15th time doing it, we're here for you. 100th time, we're
Mhm.
still here for you. Just because you've been doing it 100 times doesn't mean you've perfected it either. This is what we do every single day. This is all we do. This is our life. We're the experts. I don't go get, open heart surgery by myself because I'm not a cardiologist. You you go to the experts who can do things for you. And we don't want to make this process seem daunting. It's not. We're transparent. We try to tell you how the process, guys. We're here to help. We're here
It's
to
not
help.
daunting, but it's crucial. It's crucial to your success. And if you don't take it seriously, you're going to be frustrated with us later about why didn't this loan go through? You got to put some of that own seriousness and like taking it as important as it should be and putting that work in up front. And that's where we put in the work. And yes, it gets easier every time you work with us, but it's the start of our working relationship with our clients. And it's where a lot of deals stop. And let's be honest about that. A lot of deals start this phase and they never go past here. Not because we couldn't get them a loan, not because we don't want to help them, but because the client doesn't want to put in that their portion of work to get it started. They don't want to have to put in their time to get us going. And we can't help you help yourself unless you are willing to help yourself.
It's key. Documentation is key. Key to success and your continued business ventures and your real estate ventures. It is key to get that organized. But we're here to help alleviate some of the pain that you go through in this process and explain things. It's getting your ducks in a row. And then how many times clients reach out to me and go, "Hey, you got the full files you mentioned earlier?" I go, "I need this for so and so for annual due diligence on XYZ loan." I go, "Why don't you just reach out to me already ahead? I can just click a button over to them." We keep things organized. You can then utilize us as your repository too. We are here for you. We're your one-stop shop for these things. We're here to make your life easier so you can continue to do what you do best. So I think this great way to get us excited for our next one, Ben, which gets
Yeah.
into a little bit more of the weeds, guys. This is where we're going to take all this information that you have provided to us, and we're going to bring our underwriter on, and he's going to talk through his underwriting process and what he does with this information and how it's valuable into him putting together the package and making the recommendation that this is a good loan to move forward on and structuring a deal for you. So this is leading up to the next step, which is so you can delve in and lift up the curtains to see what is happening behind the scenes of underwriting. And it'll make you more educated on what is actually happening, what they're looking at. So again, it comes back to the prep for you. If you understand what's going on in underwriting next, you understand where all these documents that we're requesting come into play, and it should make the process more transparent and understanding for you.
Because it may be painful at times, but at least if you understand why you're doing it, you're way more likely to follow through and you're way more likely to put in the work because you understand why you're going to get the reward in the future.
Yeah, not understanding is the worst thing in the world. Well, why do you need that? Oh, we need it because of this and this and this. Is there sometimes I'll come back and tell you, why do you need to provide that? Well, this is a check a box for a regulator. Not gonna lie. And I think we talked about that in our previous podcast with Charlie and Rudy, where they said, yeah, sometimes we just gotta check a box. Check a box. It's not really needed, guys, but we gotta check a box. And I will explain that to you, but you'll understand what's important and what's valuable in the underwriting process to make your life more understanding and to work with us and to be help you achieve success, guys. So we're looking forward to this. Excited to see you guys on our next podcast here. Ben, we'll have our special guest Jay on that podcast, and look forward to you guys speaking with you guys next week.
Yeah, and just one final reminder, please, if you have deals and you want help on them, talk to us before you get it under contract. It makes all of our lives easier. We're here to help.
100% agreed, Ben. Wait, I think it's a great note to end it on. Everybody have a good one.